The Indian real estate market's steady start towards recovery was stifled by the NBFC liquidity crisis. So says the latest report from property consultancy giant Knight Frank India. CNBC TV 18's Nithya Balakrishnan and Kevin Lee break down the contents of the report.
The good news first. In the second half of 2018, the Indian residential real estate market showed a year-on-year growth in both sales and launches for the first time this decade. The bad news? A solid attempt at recovery was laid waste by the NBFC liquidity crisis.
2017, the launches came down with RERA, implementation of RERA, with the GST coming in and people. So there was a whole lot of throttle demand in 2017. So 2018 was really the whole launches coming back, which were earlier meant to be in 2017.
New launches rose 75% in 2018 thanks to relaxations in regulatory restrictions in Mumbai. More than half of these new launches were below the 50 lakh rupees ticket size. Sales for the year were 6% higher at close to 2.5 lakh units. India's most expensive real estate market, Mumbai, saw new launches more than quadruple and sales were up 3% for the year. Mumbai also saw a weighted average price fall of 7%, which Knight Frank says makes Mumbai the most affordable it has been this decade. Neighbour Pune saw launches double from 2017 levels, but sales were down over 1%. In the national capital region, meanwhile, the recovery continued. That market saw 35% more launches than in 2017 and 8% higher sales. Prices grew a modest 2%.
The real estate market in 2 out of 3 southern cities showed significant traction, with Bangalore continuing to lead the pack when it comes to residential as well as commercial real estate, sales, launches and rentals. Hyderabad is playing a quick catch-up and showing robust traction in H2 of 2018, but developers in Chennai are hoping that post-Pongal is when demand will finally pick up.
Bengaluru's commercial market has outperformed even the country's financial capital, and the residential market kept pace with that trend, with a 22% jump in new launches and a 27% jump in sales in 2018.
Bangalore continues to lead because of its mature markets, and over the years it has done numbers without any breaks, and it has its own momentum.
Hyderabad continued to build momentum with over 5,000 launches in 2018 against 3,500 in 2017. Sales saw a 9% improvement. Chennai started 2018 on a disappointing note but picked up the tempo in the second half of the year. It closed 2018 with a 12% growth in launches and a 3% growth in sales. These numbers hold out hope.
With the credit-linked subsidy scheme under the Pradhan Mantri Awas Yojana getting an official extension and expectations that the GST Council will cut rates on real estate to 5% from the current 12%, 2019 should be a good year for Indian real estate, provided there is enough liquidity in the system for developers. With Nithya Balakrishnan in Hyderabad, in Mumbai, Kevin Lee.